The Hong Kong market has also picked up. It's 1.2% in the green.
Reliance Retail Ventures is getting an investment of 8,278 crore rupees.
20-day moving average, which is about 100 points away. 19,529 is that level. That's the all-important resistance.
Jewel in the crown from our perspective is Reliance Retail.
Nifty over the moon as well. Look at that. I mean, say 70 points higher now.
The second half is going to be a little bit more different or a little bit tighter than the first half has been.
Private equity investor, which is backed by Apex Partners, they were the seller in today's block.
I think the US FTA has classified their Piparia facility as voluntary action indicated status.
Now everybody's waiting for the modalities to unfold. I think folks are figuring out, how is this import license going to work?
In the last 1 hour, we've given up gains. So now below 19,500. 8,000 crore of a deal, 27% stake nearly. Yet the stock is rising in trade.
The business is already doubled in size and is well positioned for the next phase of growth.
And the scooter has been launched at a very hefty price of 2.5 lakh rupees.
The mid-cap index is managing to hold up with a gain of around 0.6%.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Nigel D'Souza. Good afternoon. It's a bit of a disappointing session, right, on the large cap index. Yesterday it was such a solid session. Banks did well, large caps did well, and you were just hoping that today you're going to see that follow through. And we had that in the first, half an hour of trade, and the Nifty almost went to 19,600, and it's just suddenly given up. And now we're currently in the red for the benchmark indices. It's a good 150 points plus off from the session highs. The sensex 2 is lower by close to about 70 odd points. Mid caps are holding up in the green, but again, the mid cap index too is seeing some signs of fatigue, some sell off from the day's high. Look at the last few minutes on the mid-cap index and you would see a little bit of a downtick. That said, the mid-cap index is still holding up with a gain of nearly 2.8% for the week. So that outperformance versus the benchmark continues for yet another day. The advanced decline ratio right now at least is holding up in favor of the gaining side. But it's just on the large cap screen that there is that bit of a disappointment. Again, the important levels to track will be today's intraday high, which is 19,584, and after that, the 20-day moving average. These would be two important, resistance levels for our markets. The losers today are L&T, ONGC, Reliance, HDFC Bank. Gainers include Asian Paints as crude prices have seen a bit of a knock. ICICI Bank, Infosys, but just a particular mention on HDFC Bank. HDFC Bank continues to underperform, particularly today as well. HDFC Bank is down close to about 0.5%, and week to date, while ICICI Bank has rallied 2.5% and Axis Bank has rallied 4.5%, HDFC Bank so far this week is down nearly 1%.
I can just tell you guys that for me, it's a bit of a concerning session today with the kind of cool off that we have had, no follow through, and not even just steady state, but actual sell off. Look at the small cap index, by the way. For all you know, it could slip in negative territory. It's just about 6 or 7 points higher. Mid cap index is still holding up, but even that index is off the highest point of the day. Small cap index up about 7-8%. The Nifty small cap is the one that I'm referring to. And the Nifty itself, of course, has been struggling. By the way, the Bank Nifty, pull up the Bank Nifty as well. It is quite close to the lowest points of the session. Still some gain on it, about 80-90 points higher. But banks, which have been the big pillar of support for the market, they're selling off. That Bank Nifty in today's expiry day, it's not looking very comforting. Now, contrast this with the global picture. The global picture has been absolutely resilient. In fact, there's been good news on global screens. NVIDIA's numbers are above estimates. And because of that, US futures are quite excited. You've got European markets positive. That's Asia. A lot of the Asian markets have had a very good day. In fact, NVIDIA led, to a rally in a lot of other semiconductor stocks in Asia as well. That's the French market for you, between 0.5% to 1%, depending on Europe. Bond yields continue to cool off as well. So that was the other worry factor. Remember when we started the week, the 10-year US 10-year yield has now come down to 4.18. All short point is that all global factors are favoring the bulls. Yet bulls in India are not able to deliver. In fact, they are on the retreat and it's the bears that are taking over, and that's where the concern is. To end things on an optimistic note, I'll just talk about some of the movers and shakers in the mid-cap market. Watch out for sugar stocks. By the way, there's a press report, a Reuters report, I think, which is talking about India perhaps looking at a complete sugar export ban to ensure that we have adequate stocks as we get into the festive season. That's led to some sort of a green on some of the sugar names there. So that is a bit of a sweet spot, along with, of course, all the Chandrayaan stocks, as I call them, or the space stocks. But other than that, Nigel, market looks a little concerning now from a bull's perspective.
No, Surbhi, don't be so concerned, I think so. Surbhi, you have partied, right? After some time, you get a little bit tired, right? So maybe the music stops for a little bit. Hold your breath. I don't think it's such a big worry.
Just to take a breather, basically.
And particularly from the broader market perspective, at least as things stand, yes, we have been raging out there. And just take a look at, in this fiscal year itself, we're up 25-30% on the index. Individual stocks are up 100%, 80%, all that. So I'm not too worried about the broader markets. And just this morning, the first hour of trade was good. And after that, it's been a bit of a downtrend. Yesterday, the entire session was good, barring the last 45 minutes. So it's a bit of a reversal of sorts. Now, how is trade set up? The Nifty Bank is facing resistance at around the 44,700, 44,800 odd mark. And I say this because you have the 20 and the 50 DMA out there. Let's get those levels up for you on the screen. And today's high is a little bit higher than that, 44,950 approximately. Remember, on the downside, 44,200 was a bit of a hurdle. We have managed to cross that. Now you're keeping an eye out on the 20 and the 50 DMA. So that's going to be an important point. We've come off a little bit in today's session. The Nifty, well, we're seeing aggressive writing at around 19,450 call. 19,500 call as well. I think the bulls have thrown in the towel on that mark. But, we are seeing writing at the 19,450 odd mark. So just taking a rough estimate of, the premium out there, around 30 rupees approximately. Well, the resistance should come in at around 19,470, 19,480. A few minutes ago, we almost went to 19,460 and we saw a bit of a U-turn. So let's get the resistance level up for you on the screen. While on the downside, since 19,400 put has a fair bit of open interest, I'm looking at the 19,390. The day's low, by the way, is 19,405 approximately. So those are the crucial levels that we're looking at for the final 60 minutes since it's weekly expiry. But how do you position yourself? Well, Mitesh joins us. Mitesh, we were ready for, to take off today. I think maybe we did a little bit, too much with regard to talking about the moon this morning. Unfortunately, the markets went up, and after the first 60 minutes, it's been disappointing. Though the trend, do you still think it's upward, or do you think we're in this consolidation phase of 350 to 400 points out?
Good afternoon, Nigel. So I think yesterday was something which was historic. So I am not, one is not surprised that the discussion was clearly dominated by the moon landing. But that apart on the markets, I think it's broadly a consolidating market. What is good is that in my sense is the Bank Nifty, which was underperforming for last many weeks, has now started to take some kind of an upside traction. And despite the fact that today Nifty is negative, Bank Nifty is mildly positive. The Bank Nifty also hit the first target of around 45,000. So it made a high of around 44,949.9, which is on the spot, and has slightly tapered off from there. But as long as the Bank Nifty is above 44,350, I think there's a good chance that we will, within this range, we will try to trade on the upside and test the upside ranges. For the Nifty, I've maintained that is 19,650. And for the Bank Nifty, it's about 45,400. So 45,000 is a pivot. Once you cross that, 45,400 should be the upper end of the range. That's where we'll advise to take profits. But otherwise, it's a choppy and a consolidating kind of a market broadly if you take a few weeks kind of perspective. So we're not going anywhere and try to trade near the edges. On the stock side, Marico has come on the buy list today. That's a buy with a stop at about 556 and a target of 580 can be looked at. And amongst the IT names, Emphasis has given a big breakout. That's a buy with a stop at about levels of 2,400 for targets of around 2,600.
Okay, got that, Mitesh. You stay on. We'll come back to you in a bit and get some more trading ideas going. For the time being, let's put the spotlight on the big story of the day. The market has witnessed unprecedented selling from promoters, private equity investors, as well as strategic investors, worth a whopping $10 billion in 2023. Investment banking sources suggest that this trend is expected to actually pick up even further in the near term. In fact, deals worth 10,700 crores, that's over $1.3 billion, got executed in just one single day. That is today, across multiple block trades. It's really overwhelming, the kind of block trade action that's going on. Nimesh has been tracking all of it for us. He has the highlights and the details. Nimesh.
Well, it is indeed unprecedented, right? $10 billion of stake sale from promoters and private equity investors in 2023 alone. And in a single day today, there were blocks worth 10,700 crores, which is $1.3 billion got executed across multiple blocks. So there were large blocks. I'll start with Coforge first. That was a big block today. 26% of the company's equity got changed hands. The Barings private equity was a seller in today's block, huge block. They've raised close to 8,000 crores in a single block today. So multiple buyers today, but again, there was a large block in Coforge today. So that was the first big block deal. The second one was Manappuram Finance. Again, a large block, 9.9% of the company's equity got changed hands. I understand private equity investor, which is backed by Apex Partners. They were the sellers in today's block. So it's technically a clean out trade from the private equity. And in terms of buyers, there are multiple buyers in this particular block as well. But again, there it was a deal worth close to 1,400 crores. So that was another large block deal. The third one was Max Financials. Even in Max Financial, there was a block of close to 3.5% equity changing hands. I understand the promoter entity was a seller in today's block, so the disclosures will be important in that as well. Even that block was worth close to 1,000 crore rupees. The fourth one was RBL Bank. Even in RBL Bank, there was a block close to 1.7% equity changing hands. I understand from a seller perspective, and FI was a seller in today's block, and there could be some multiple domestic mutual funds who were buyer in this block. That was worth close to 235 crore rupees. So these were what got executed today. But if you look at in the very recent history, some very large blocks got executed right on the exchanges. The one which stood out is SGS Enterprises, a large block. 30% of the company's equity was sold by private equity investors, and they raised close to 540 crore rupees. The one large block was Adani Power. The promoter entity sold nearly 8% to GQG, and they raised 8,000 crores in a single day, selling that 8% stake worth 9,000 crores. And the last but not the least was Interglobe Aviation. Even there, Ganwal family sold 4%. There is another 2,800 crores by a block deal. So, again, the feedback is, while we are seeing a lot of block deals from promoters and PE investors, looks like the trend is going to continue. And the overall feedback is there is still a lot of supply coming in terms of blocks where the private equity are going to be a large sellers.
Okay, all right. Thanks a lot for that, Nimesh. Well, coming back to Coforge then, Barings PE has completely exited its stake in Coforge, selling its 27% odd stake via a large trade this morning. Baring had invested in Coforge in 2019 at an acquisition price of close to around 1,394 rupees, and they've exited their stake at around 4,700 rupees a share. Earlier today, we spoke to the management of Baring Private Equity Asia. Let's listen in to what they had to tell us.
On Coforge, it's the business that's doubled in size since we first invested in the company 4 years ago. Doubled in revenue, doubled in profits. And so it's accomplished much of what we set out to do, but the future of the business is also extremely bright. First of all, Sudhir Singh, who's the CEO of Coforge, is an excellent manager who's executed impeccably over the last several years. In fact, since we bought into the business, he was the CEO at the time that we invested and has continued to run the business and grow the business. He's done an extraordinary job, and I think he's very credible with investors.
We think that the evaluation is fair, and our aim is that the business continues to grow well. As John mentioned, the business has already doubled in size and is well positioned for the next phase of growth. So we would say it was a good outcome for all parties.
Just to wrap up this discussion on Coforge, let me tell you what Jefferies did today. Well, they've upgraded the stock to a buy, and look at their target price, 6,250 crore. It's one of the highest target prices on the street on Coforge. The reason is, one, the technical overhang of promoter stake sale is now out of the way because the promoters have completely exited. Two, the street will start focusing back on fundamentals. In fact, they were saying that despite repeated promoter stake sales, Coforge has actually outperformed because the fundamentals were looking up. And this is a company which has outperformed peers. And according to Jefferies, going ahead as well, it will see a 15% top-line growth and an EPS growth of 22% over FY24 to FY26. So with the stake sale, the promoter sale overhang being lifted and sector-leading growth, according to Jefferies, the PE valuation multiples can re-rate from current levels, which is why they've put a target price of 6,250. Only bear in mind that the valuations already are at a premium. It's trading at a 28 times forward multiple, which is a 15% premium to its 5-year average. But, absolutely phenomenal, the kind of response that we've seen to Coforge, and, it's 9-10% higher now. Who would have thought, right? On a day where 27% stake, sale takes place by the promoter, the stock will be up close to about 10%. Mehraboon Irani is with us now on the show. Mehraboon, what have you made of Coforge, up 10% right now? Do you like it? And do you think it can continue with the kind of growth rates it's been clocking in?
Good afternoon. I think, yes, I do track Coforge, and if you allow me to state in one line, I would say that it's one of the possibly the best managed IT Tier 2 company. The overhang is the regular private equity selling which is happening. But recently, the management con call which I attended, they have clearly given EBITDA guidance of around 18.3%. The order intake was possibly the highest ever at around $531 million. Now, if you take the executable order book, it roughly works out to around $900 million for FY24. If you go back to the past, last 2 years, Coforge earnings from 109 has gone to 133. And I'm not extrapolating. I'm looking at the order book and stating that if you look at an earnings of around 160 rupees in the current year and 195 to 200 rupees in FY25, well, this is a stock which you should be looking at. However, the problem is in the present environment in which we are, especially the IT sector, do you really pay a PE of around 26, 27, 28, 29 times FY25 earnings? I would certainly not like to pay. So while Coforge, I still state it's one of the best managed second-tier IT company. The point is, I would look at more comfortable levels from the valuation angle to buy it. So give it to me at a PE of 20 or 23 or even at 25. Certainly Coforge is a stock to look at. At the present level, I would give it a pass. Despite stating it's a great company, despite stating management con call was good, despite stating earnings are going to do very well in FY24 and maybe in FY25 also. But the fact is, I don't see money being made at the present level over the next 12 months. So a 5, 10, 15% correction from the present level. Maybe if you had asked me this question yesterday, I would have still said it. Maybe a 5, 7% fall from yesterday's closing level. I think it's the stock which one should possibly be looking at from an investment angle if one wants to invest in the IT space. But at the present level, I don't see too much of money being made in stocks in the IT space which are at 30, 27, 30, 32 times P. I don't see money being made.
Okay, all right, Mehraboon, noted your view. No, not too positive, but these levels at least. Well, let's focus on another stock. TVS Holdings, well, it appears that the stock is under pressure today. Keep in mind, it's the erstwhile Sundaram Clayton. And if you compare this morning's open price with yesterday's close price, you'll be wondering why is the stock down by close to around 1,000 rupees. Pull up the stock first. Let's get it up for you on the screen. Well, the reason is the stock is trading X its die casting manufacturing business, which is named Sundaram Clayton DCD. Also, if we want to rewind a little bit, then we can recall that in March 2023 itself, the company traded X its redeemable preference shares and gave 160 non-convertible redeemable preference shares of 10 rupees each. So 116 shares multiplied by around 10, you'll get 1,160 rupees. That part of the money has already been received and it's already in the demat form, not yet traded though. If you bought one share of Sundaram Clayton at that time, you would already have these preference shares with you. Now, how do we value what's left? That's TVS Holding. Well, the figures come up for you on the screen. They indicate it's trading at a 70% discount for the value of its holding in TVS Motors. As we know, TVS Holding has 50% stake in TVS Motors, which is valued at more than 30,000 crores. The current market cap is around 10,000 crores odd. So effectively, if you bought the stock 1 year back, you would have got around 4,600 rupees. If you bought it exactly 1 year back, the share price was 4,600 rupees. And today you have the equity share worth around 5,000 rupees. But you also have preference shares, which amount to around 1,160 rupees. And in addition to that, you'll get one share of the die casting business, which has adjusted around 1,000 rupees. So effectively, in the last 1 year, you bought the stock for 4,600 rupees, and effectively you're getting more than 7,000 rupees. So it's a whopping 50% return. Just wanted to explain that to our viewers who are wondering why the stock is under pressure. For the time being, though, we'll slip into a short break. You come back, we'll get chatting with Punita Kumar Sinha of Pacific Paradigm Advisors on the other side. Don't go anywhere.
Okay, and the cuts are getting deeper. 40 down now on the Nifty. Bank Nifty is barely holding on to any amount of gain. So this is trending towards what looks like a pretty weak afternoon. Pull up Bajaj Auto. Some of these names are now beginning to falter. Adani Ports is another one. Adani Enterprises. Some of these Adani stocks also. There's some more selling pressure that's quite evident on these names. Reliance is another critical aspect over here. It has anyway been down. I mean, Reliance is negative. About 1.5%. So let's see now what happens. That's a sharp drop in some of those Adani Group stocks as well in the last 15-20 minutes or so. So that is the market right now. Mehraboon Irani is still with us. He's in conversation with us. Mehraboon, good afternoon. So you would have, of course, noticed this big rally that's happening in a lot of these space and defense stocks, right? They're quite the flavor, at least of the week. But, you know, let's go beyond, of course, the big glorious headline of Chandrayaan. I mean, companies like MTAR, for instance, I was reading up, and they've been doing work on the nuclear side and this aerospace and defense side for a very long time now. I think they're 3 decades of an alliance with ISRO. The question is, would you look at buying any of these stocks afresh, whether it's a Mishra Dhatu or an MTAR or even a Walchand Nagar?
I think quite a few defense names, in fact, not quite a few, I think most of the defense names are given fantastic returns to investors. And I confess that while I'm holding some of them, if this question had come to me maybe 3 months ago, I would have stated that most of the stocks in terms of valuations have gone up very sharply ahead of earnings coming. But today, if you ask me, I would possibly answer in the same way. But this is not to state that I would say that stay away from defense stocks just because the valuations are expensive. This is a space which you need to be in. You know that this is one of the most favored sectors of the present government, along with possibly sectors like railways and others. So I would say that stay with these names. If you ask me, the best names, according to me, in this space continues to be, despite a little bit of lofty valuations, remains Hindustan Aeronautics Limited and Bharat Electronics Limited. But a name which I am quite convinced about and which I feel the company is transforming itself. And while this company is known for its presence in sectors like power, infrastructure, it has done a lot of work in the defense space also, which not many know, is Bharat Heavy Electrical Limited, that is BHEL. I personally have been attending whatever con calls which I can have. I've been tracking the numbers, and I believe this company is on the mend. This is a company in the public sector space which everybody needs it. Like, it is serving various segments. It has set up a dedicated defense and aerospace business group at Delhi as a one-point contact, and it has served a lot of companies in the Air Force as well as Navy as well as defense in all possible ways. So if somebody wants to buy a stock knowing that most of the stocks have become expensive, maybe a little bit overowned for the moment, I would say that go with BHEL. Clear disclosure, I'm personally holding the stock, and while the stock has moved up, I think if the company is really working towards transforming itself into a major company serving the defense power as well as the infrastructure space, I think this stock could have a very different price, maybe 6 months or 9 months or 1 year down the line. So I would like to, in the present environment, look at companies across segments which are still not very heavily overowned, and BHEL certainly qualifies as one of them. So while I remain positive on this space, on the which you asked me, I think most of the valuations are quite lofty, quite expensive. This is not to state they will not go further. I think the business will continue to come for them. But if I were to buy something in the present valuation, I would go with a proxy called BHEL, because it also serves the power and infrastructure space, which also are favored sectors of the present regime.
Mehraboon, pleasure having you today. Enjoy the rest of the day. Thank you very much for joining
Thanks a lot.
in. Thank you for joining in. Let's also invite Puneeta Kumar Sinha, Managing Partner and Founder of Pacific Paradigm Advisors and Independent Director on several companies, on the show now. Puneeta, afternoon. I don't know if you were listening to our conversation. We were talking about industrials, defense, the entire CAPEX theme. And the order books are swelling. The companies are executing well. They've reported solid numbers over the last few quarters, and the stocks have been big wealth creators. The only problem is the stocks are very, very expensive. So what do? Should you buy into this entire CAPEX defense theme, or would you stay out of it, concerned because of the valuations?
No, great question. Thank you. So first of all, I agree that infrastructure defense is a great place to be in India. for many reasons. One, we are benefiting from the fallout from China. And so companies globally are looking to expand their footprint in India. So they are looking to partner with Indian companies, and Indian companies need to add more capacity. And the great thing is that our companies in India are under-levered right now. The balance sheets are generally healthy. Levels of debt are low. So there is the capacity to raise funds and financing this capacity expansion that is much required. So given this macro theme, I think there will be a lot more capacity that will be added in India over the medium term. And that means that these companies in the sector and space will do well. Now, of course, if you go back 10, 20 years, this has always been a theme that India infrastructure is very, very poor and needs to grow. But the companies somehow didn't have the right governance, or they were over-levered, and therefore they were not able to deliver the returns to shareholders. This time around, I hope it's not the same. I think the governance structures have improved, balance sheets are healthier, and there are many more companies to choose from. So I think this is a good space to be in, and I would say that another cheaper way, of course the valuations are a concern, another cheaper way to play the capex cycle is through financials. Because if these companies expand capacity, they will need financing, and the financing is going to come from the banks. So banks are actually a lower valuation play on this capex cycle, and so that also could be a way to look at investing in this space.
All right. Hi, Punita. Good afternoon. Well, that's an interesting comment that you're making, indirect way of playing this theme. From the banking lot itself, what would you go with? Would you go with, since I think you're leaning more towards value rather than growth, would you be still looking at the PSU banking names in comparison to the private names, or would you go for a basket of both?
In general, I would say that India's, while India is not the best performing market this year, if you look at the indices, the large cap indices, or just the standard indices, we are, even within Asia, other than China, Hong Kong, which are down, Korea, Taiwan are, Taiwan in particular is up more than India, and some of the other Latin American and other EM markets are up more than India. But within India, there is so many stocks that are up like over 40% year to date, 50%. So valuations, although are not at peak levels, India's traded historically at higher valuations than it's trading today. But we are, close to the range of on the higher side. So in a scenario like this, where earnings are now behind us, the earnings season is pretty much over. And what is going to drive the markets is very much what's going to happen in Jackson Hole, what's going to happen globally, what's going to happen in China. So there is a lot of global macro that is going to come back into focus. In a situation like that, well, we should definitely have a growth-focused portfolio. I think on the incrementally, one should be looking to add to value stocks. And in that, I put PSUs overall. So we heard the prior guest talk about BHEL and PSUs. I think PSU, whether it's PSU banks, it's PSU companies and other sectors, I think that's where we still have value and valuation comfort. And so I think those companies can also be an attractive play.
Okay. Got that, Punita. Hi, good afternoon. So we spoke about the industrial space, and you gave your views there. Now, let me ask you a broader question in terms of just the right portfolio construct right now, where mid caps have gone up a lot, large caps are consolidating, and we also have a general election coming up. Let's say if someone were to look at deploying fresh capital now over the next 1 to 1.5 years with that kind of a time frame, what would you advise them in terms of just the broad themes that are a must-have in the portfolio?
Well, a must-have is obviously, I said, financials. I think PSUs would be a good place to invest in because of the valuation comfort. I think CapEx-related companies, you always need to have some IT and pharma. In fact, those are kind of defensive sectors right now. So I think you have to have a balanced portfolio, and mid and small caps do offer a large number of opportunities, but the valuations on the large caps are a lot better today. So I think you need to have a balanced flexi cap portfolio with some, but I wouldn't be rushing into mid and small caps. If there is any place you want to be incrementally, I think you should look more in very stock-specific names, including looking at some laggards in the large cap space.
All right, Punita, which sector you think has already run its course? It's time to pack your bags, move out of them, book some profits. Which one according to you?
I wouldn't look at it sector-wise necessarily. I think within each sector, some stocks have run their course. So I think you need to kind of rotate out of those into other names in that sectors. But you can't be out of tech, you can't be out of autos, you can't be out of financials. You really just can't get out of those sectors. They are core to any India portfolio. I think the sectors that perhaps you can still look at from a longer term perspective, given India's growth story and how much their demand there is coming from companies on strategically, manufacturing related, which is chemicals, process, infra, cement, those sectors will still see growth, but you have to be very stock specific. So I would say that there is no particular sector that I'm totally out, saying you should get out of.
Okay. All right. Punita, we'll leave it on that note. Thank you for joining in today. Appreciate your time.
Thank you.
We need to take a very quick break on that note after our conversation with Punita Kumar Sinha. On the other side, all the chatter from dealing room. So we'll have Nimesh joining in, as well as some trading calls with Mitesh. Welcome back. Well, just rounding up after 3 p.m., 40 points down on the Nifty. Let's find out what's been buzzing in dealing rooms today. We have Nimesh joining in with exactly that on D Street Chatter. Nimesh, a bit disappointing, I guess, the way the market sold off in the second half today.
Oh yes, sir, clearly disappointing. And the fact is that what led the rally yesterday, the Bank Nifty, that's been a big underperformer in today's trade. A lot of the PSU stocks, which have seen a lot of momentum of late, they are seeing a bit of reversal today. So to that extent, yes, it's definitely a bit of a disappointment in today's market. But the big headline for today is clearly the large block deals which got executed. So the institutional data for today will be very interesting to watch out for. Remember, it looked like a very large number because of these 4 large blocks. But in many cases, the sellers are not from the part of institution. So the one-side number may look very large in today's trade. I guess the sector of the day is clearly the mid-cap IT names. What we saw in Coforge, I think that had a bit of a rub-off on the other IT stock, mid-cap IT names as well. And we're seeing a bit of momentum in the mid-cap IT today. But the other interesting aspect that I've picked up, and that's been visible in many stocks as well, that a lot of investors are now chasing the breakout stocks. And that's not only one particular sector. Across sector, when you're seeing a large breakout, you're seeing a lot of chase in that particular stock. So both ways to read this, whether people are now finding it very difficult for newer ideas. But largely today's disappointment is coming from the banks, and within that it's the PSU banks which has seen a bit of a reversal today.
In fact, mid-cap IT could also be higher because of the kind of results that we've seen from NVIDIA, and there's general hope that, because most of these companies also have incubated some sort of a generative AI, arm within themselves or some segment, and there could be that rub-off impact that we're seeing on IT, and it's happening across the world. But Nimesh, getting back to stocks, what's on your radar?
Well, in terms of individual names, the first stock is very interesting, which is Universal Auto Foundry. Even I had not heard of this name before. Big mover in that stock. The stock is locked at 20% upper circuit. It's a very small company, just a 235 crore market cap company. I believe there was a block of close to 20 lakh shares, which is equivalent to nearly 15-16% of the company's equity. And I understand a marquee HNI investor is a buyer in today's block deal. So, and after that, we've seen a stock locked at 20% upper circuit. So maybe the disclosures could be quite interesting in this particular name today. So that's the first one. The second stock is Zomato. Staying with the theme of large blocks, you can see a large block in Zomato very soon. Again, one of the large investor will be a seller in this particular block. But again, the feedback is that there is a very strong demand. So looks like that can happen very soon as far as Zomato is concerned. The third stock is Indiabull Housing. Again, after a very long time, looks like some bit of interest is back from the larger institutions. In fact, there were indication of block bids in Indiabull Housing from the larger FIs today. Remember, the stock is still in the FNO ban, so it can only happen in the cash market. And the last stock is Electronics Mart. For the second day running, huge volumes in that stock. That stock is buzzing again in today's trade. For the second day running, there are very strong buy flows from larger FIs. So some bit of institutional interest is back in that particular stock, and hence a big move for the last couple of days.
Okay, thank you very much for that. Getting back to IT in the large cap space, Infosys is gaining ground. Infy's moved to the day's high, 1.2% higher, and it's now very close to its 200-day moving average. Let's see whether it can surpass that. Mitesh is back with us for a few BTST calls. Mitesh, the index hasn't done too much. It's still below 19,400. Any individual trades that you would recommend now?
The index has been very quiet, but I think on the BTST side, I have, or rather, one trade on the STBT is Syngene. I think after a good rally for the last many months, it's now showing first signs of correction. So Syngene, I would suggest a short-term sell with a stop at 805 for targets of 785. And the Asian Paints is something which can be taken as a BTST call. Keep a stop below 3205, look for targets of 3255.
Okay. All right, Mitesh, bless you. Thank you for the trades. You take care. We'll catch you with the market again tomorrow. Let's move on to another big story. Qatar Investment Authority has snapped up a near 1% stake in Reliance Retail Ventures for a valuation of $1 billion. This actually values the company, that's Reliance Retail, at a whopping $100 billion, which is about twice the valuation of its last fundraise round. Shilpa is here with all the details. Shilpa, quite a few big numbers there.
Well,
An 8,278 crore investment from the Qatar Investment Authority has valued Reliance Retail Ventures at a whopping $100 billion. This valuation is in fact doubled in just 3 years. So towards the end of 2020, when Reliance Retail had raised over 47,000 crore rupees across 8 investors, it was valued at about 4.21 lakh crores or $50 billion. And this doubling of valuation, in fact, comes as no surprise if you just look at the sheer growth and expansion of the company in just the past 2-3 years, especially under the leadership of Isha Ambani. Now, as things stand, the company has over 18,000 stores, and this spans across the country. The company's revenues in FY23 grew 30% and over 26% in the previous fiscal. And in just 3 years, it has added over 5,000 stores, over 30 million square feet of retail area, and this is across 20 new formats at least. But first, let's look at what this behemoth of a business even comprises. Now, Reliance Retail Ventures, as we know it, it has the core retail business, and then you have Reliance Brands, under which it licenses and sells luxury brands, and then the newly launched FMCG business under Reliance Consumer Products. Now, under these businesses, Reliance Retail covers consumption baskets that are across fashion and lifestyle. You have consumer electronics, FMCG, grocery, and pharma. Now, further under these are different formats where you have departmental stores or retail type stores, for example. This includes the new formats also that it is launching. Then there's the ethnic wear format, its supermarket formats, grocery through JioMart, luxury brands under Reliance Brands, and then its e-commerce presence through AJIO. Now, most of these formats were added, in just the last 2 to 3 years. For instance, JioMart was announced in FY23, and then a standalone ethnic wear stores were announced, gourmet grocery, Fresh Pick, a convenience format under 7-Eleven, among others, in FY22. And most recently, we saw some very big forays coming in, like beauty into foray through Tira, into food through Pret-a-Manger, and B2B wholesale through the acquisition of Metro. Now, this year, the company also saw the takeover of nearly 950 stores of the Future Group, which it then converted into new formats, as you can see here, where Big Bazaar, for instance, became a Smart Bazaar and so on. However, the FMCG business it announced exactly a year ago was one of the biggest announcements to come under Reliance Consumer Brands. Now, since then, the company has acquired a whole host of regional brands like Campa Cola, Socio, etc. It also launched its own brand, which is called Independence, and this also spans across categories. It also converted a whole host of its private labels into consumer brands. And this entire expansion, if you remember, has been a mix of both not just launching its own brands and formats, it also did a whole spate of investments and acquisitions. If you look at the exhaustive list here, you have about 14 that were done in the last fiscal alone, some notable names like Metro Cash and Carry and a whole host of luxury brands also. And then in FY22, you had Just Dial, you had an investment into Dunzo, you also had a whole host of other luxury brands like, say, Manish Malhotra, and then there was the e-pharmacy player NetMeds, among others, the year before that. So, there's that. This is India's largest retail player, and given its sheer spread, there is no close competition for the retail business in India, and the company continues to add new formats and categories, both organically and inorganically, making it an attractive proposition for any investor. Now, all eyes are on the upcoming AGM that will sort of give us further commentary on the company looking to unlock more value possibly, and also possibly a timeline for the IPO.
Okay, Shilpa, thank you very much. Very comprehensive. I'm shocked by the number of brands they own. You know it, but just when you go through that entire list, the magnanimity of it takes you by surprise. But Sudeep Bandyopadhyay, the group chairman at IndiTrade Capital, is with us on the show. Sudeep, the countdown has begun now for the 46th AGM from Reliance Industries. And we know in the past that the AGM has been used as a platform for making big announcements. The Jio, entry into Jio, the stake sales, their new energy plans, the 5G foray. What do you think it's going to be this time?
Well, I think one thing I can tell you, which we have been waiting for and many investors have been waiting for, they announced about 4 years back at the AGM that in 5 years, both Jio platforms as well as retail will be separate companies where investors will be able to participate. I think we are now eagerly waiting. I wish we could buy into Reliance Retail today. we can't. Some of us will also wish we can buy into Jio Platforms, which is probably the telecom business. I think we can't buy into those businesses. So that announcement will be eagerly awaited. Also, there may be some announcements which market is expecting regarding the new energy businesses. There are discussions that probably the hydrogen bit will not be scaled up and other parts of the green energy business will be scaled up. So that will be extremely important because that's a business for the future and holds significant potential. There may be many announcements regarding investments into the green energy business or the possibility thereof. So I think all these will be very interesting for us to track at the AGM. Jio Financial Services has already got listed. There has been some pressure on the counter. We will also look forward to some statements regarding Jio Financial and the way it will move forward. So in whole, I think it will be a very, very interesting AGM to watch and to kind of deeply study the statements coming out from there.
Okay, all right. Hi, Sudeep. Sudeep, earlier on in the show, I put down this piece about TVS Holding, which has shares in TVS Motors. Now, TVS Motors is a very expensive stock, right, on a PE basis. But the growth is something that keeps investors interested. What's your view on TVS Motors, and would you look at TVS Holding to play this stock as well, or would you just stick to TVS Motors if in case you are bullish on it?
Well, I have been watching this two-wheeler space for a very long time, and I think the biggest problem with TVS was that the margin in the business was very low compared to what Bajaj was generating or even Hero Honda was generating. The challenge became on the margin, and they were struggling to improve the margin. Even today, when all these new things have come in, EV has come in, the partnerships, they're in the process of launching EVs, two-wheelers through electric mode. Still, the margin, when I look at Bajaj or Hero, I think the margin still needs a lot more improvement. Of course, the valuation has moved up quite a bit, and at this stage, I think I will refrain from buying or recommending a buy in TVS Motor. I'll wait and watch what happens on the electric vehicle front, and after the success or whatever the market on the premium vehicle as well, because they have a tie-up with BMW, and I know you are an enthusiast of these super bikes. So let's see what happens in the super bike space as well. At this stage, I don't think I will like to buy. If I have to buy a two-wheeler company, I will still go for Bajaj Auto. One principal reason, the domestic market has been doing decent for Bajaj Auto. The challenge for them has been the exports, and Nigerian exports in particular. Once that gets to an extent resolved, I think the numbers and the results will actually be very good. So if I'm an aggressive investor, I think I will go for Bajaj Auto.
Okay, Bajaj Auto would be the pick over there. By the way, the cuts are getting deeper on the Nifty, so should point that out as well. 72 points lower on the index as we speak, and even the mid-cap index, it's losing momentum quite quickly. That's just the way things are shaping up right now. Pull up, yeah, that's the Nifty just falling deeper and deeper. It's one of those days where buyers are not willing to buy the dip, at least not today. Probably wait by and take a fresh call tomorrow morning. Karur Vysya Bank. Yes, yeah, exactly. Last time we checked, small cap was just about barely holding up around the green, and now small cap has now pretty much slipped sharply. That's a fall on Karur Vysya that I was talking about. Suddenly there's quite a bit of selling that's come in on Karur Vysya. It's sort of accentuated that decline, and that is a small cap index for now. Even RBL Bank, by the way. Some of these tier 2 banks that had a good run, they are being sold off today. Sudeep, thanks for joining in. Good afternoon. Good to have you here. I want to discuss Paytm with you in case you've had a look at it off late, because the stock has had a dream run. I think it hit its fresh 52-week high just yesterday. Still, long way off from the IPO levels, the listing day levels, but it's had a good rally. And there are a lot of brokerage notes that are now getting optimistic on it as well. But after this rally, do you think it still offers an entry point, or would you stay away?
Well, I'm very cautious on these platform companies, new age platform companies, and Paytm definitely. It's run up quite a bit. Undoubtedly, a lot of good things have happened in Paytm. If you look at 1 year, what they have been doing, I think things are definitely improving. There is absolutely no doubt about that. They have become focused on profitability and good paths to profitability, which is a fantastic development. And the public market has probably taught all these new age companies the importance of profitability, and I think that's a good development. But to kind of extrapolate that and project a much higher level for Paytm is a bit of a challenge for me. And after the kind of increase in price which we have seen and the kind of recommendations which have come in at current level, I'll be extremely skeptical about recommending Paytm to an investor. I will wait and watch. Let's see how things unfold. There is a growth assumption of the business baked in all these projections, which in a tight money situation, which probably the world is moving into, maybe a bit of a stretch. So I would rather wait and watch than jump into Paytm. There are other better opportunities amongst the platform companies. And if I have to look at one of the platform companies, I will probably go for Delivery. It had gone through a lot of challenges, but I think that's a solid business which is being developed there. And logistics is one play which we understand for thousands of years, and it is critical. If they can get their act right, I think that is definitely going to be a winner over a period of time.
Okay, point taken. Sudeep, do stay on. By the way, the Nifty went very close to yesterday's intraday low. Yesterday's intraday low was 19,366. And the low today was 19,369. Usually, these intraday lows and highs of the previous session are seen as an important marker to get an indication whether we're going to see a further breakdown. So currently hovering close to it, but not yet breached it. Get into a break. We'll come back, and 8 minutes left for markets to close.
Welcome back. Well, the markets are actually going to end at the low point of the day, so we have come off 200 points from the top. Sudeep, I wanted to ask you about Piramal Enterprises, your view on the stock out there. It's currently moving to the low point of the day. Today is the last day. Tomorrow it goes X buyback. So I think that's one of the reasons why the stock is under some pressure. Sudeep, your view on the stock?
Absolutely right, Nigel. I think, because it's becoming X buyback, things are moving down. Fundamentally, I don't see major problem in the stock. I think, the way the entire industry is developing, there is a positive tailwind, and Piramal definitely should benefit from that tailwind. And I think it's much more clearer. The focus of business in this Piramal Enterprise is much more clear, with pharma moving out and financial services in getting really focused. So I think one can look at buying Piramal Enterprises at current levels for a 1 year kind of hold.
Okay. All right, Sudeep, I suppose we'll wrap it up on that note. Thank you very much for joining in. Good talking with you this afternoon as always. We'll look forward to the next chat. Well, as we start our countdown to the close, the news is that it is ending up to be quite a weak session now, at least for the headline indices. Nifty and Sensex both in negative territory. Bank Nifty up barely 25 points. And why is that not good enough? Because, we had a great session yesterday, a good start this morning. But then the sellers kind of came in and pretty much took over the street. The mid-cap index is now going to go home with a gain of less than 0.3%, just 0.1, 0.2%. So literally just struggling to hold on to the green side of the screen. Just very quickly on the large caps, apart from banks, the pressure was also Reliance. Reliance is ending with a cut of about 2%. That's the big one that kind of caused this whole grind down. And then it had company in the form of, let's say, an L&T, some of the metal names like JSW Steel and Hindalco. IT was very mixed as well. IT didn't provide any sort of support. It didn't sort of fill in for the bank, so to speak. Look at something like a TCS, your Wipro. Barring Infosys, this is the stock on your screen. That's the only major IT stock that's closed positive. Rest of them all on the negative side. Flip side, of course, the oil refiners were celebrating the fall in oil prices. So BPCL was up. And maybe some of the consumer names like Asian Paints, Britannia, I guess that's where the buyers were today.
Well, from the broader markets, there was still plenty of action. So let's just take you through some big gainers. Copran, the stock was up close to around 20%. You had Chand, remember the 5-year chart, if you look at it, the stock is still 20% off its high. So it's virtually done nothing. That underperformer actually is up close to around 15% today. Philatex India as well, I think the stock is down quite a bit from the recent peak. That was up more than 10%. Genesis is half of what it was at its peak. So that stock as well did pop up in trade. Hariom Pipes, the stock had a good run, went all the way to around 700 plus odd. Then it saw a big correction. Now today it bounced back up. So some of these stocks had quite a large volumes as well with it. So a few stocks did quite well, though the headline index was a little bit wobbly.
Well, I think the mid-cap stock of the day has got to be Coforge, right? Promoters completely exit and the stock is going to close with a gain of nearly about 9.5%. And we had the Barings PE management telling us the book was bid up close to about 3x. Very strong demand seen there. Max Financial is another one where we'd seen a block deal and the stock is closing up in the green. A couple of these, Chandrayaan, defense names. Centum Electronics higher for the second day in a row. MTAR Tech also saw some buying. Deal wins boost Ramkrishna Forging. So that's a stock which gained close to about 3.5%. On the losing side, Hindustan Aeronautics came in for some amount of profit taking. It's been a rank outperformer, but today a bit subdued in trade. Geo Financial Services down in a lower circuit, I think, for the fourth consecutive day now?
Yeah.
The fourth one. And a couple of these banking names, mid-cap banks, like Bank of India, Punjab and Sindh Bank, South Indian Bank, also closing in the red. All in all, it turned out to be a bit of a disappointing session because markets couldn't quite hold on to the morning gains. And finally, the Nifty and the Sensex closing in the red and just a sliver of green coming through for the mid-cap index. With that, we're going to thank all of you for watching Closing Bell from the entire team. Don't go anywhere. On the other side is our Thursday special Big Team.